Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, Lisa Su, CEO of chipmaker AMD, on the promise of artificial intelligence for her $380 billion company.
The signals in the market right now say that we're still at the very beginning of the technology, but you're starting to see significant productivity.
And for how we live, where we work, what we buy, the chips we need to power AI.
I don't think it's a big gamble. I think it's the right gamble.
And the flying tomato, Olympic gold medalist Shaun White on the new opportunity in snowboarding.
Where's the next Shaun White? I'm like, they're there already. We're just not telling their story.
From the half pipe to big business.
It's been deemed action sports for the longest time, but it is sports.
Plus the rest of today's news that got us squawking, like the Trump administration reportedly weighing curbs on powerful proxy firms and index fund managers.
Most people do not have the ability, time, resources, energy, or effort to look through those votes.
Got us really squawking.
I'm buying American business.
It is Wednesday, November 12th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin. Good morning.
Good morning,
Gang's all here.
Meantime, the government and airlines warning that disruptions have cropped up during the shutdown could end up continuing even after things reopen in D.C. The FAA now instituted flight cuts in order to keep things safe, as you know, at U.S. airports. During a press conference at Chicago's O'Hare Airport, Transportation Secretary Sean Duffy saying that easing those restrictions will depend on air traffic controllers coming back to work. And he warned of further chaos if the government doesn't reopen.
Big disruption thus far, massively more disruption as we come into the weekend if the government doesn't open. It is going to radically slow down. So the House has to do its work.
And FlightAware is saying that about 1,200 flights have been canceled so far. That's just today. Yesterday, there were about 1,900 cancellations. Airlines are supposed to be cutting about 6% of their schedules.
Reports say finance industry executives have been invited to dinner with President Trump at the White House tonight. JP Morgan CEO Jamie Dimon, NASDAQ CEO Adena Friedman are said to have been invited. And among the other potential guests, reported by Bloomberg in this case, Goldman Sachs CEO David Solomon, BlackRock CEO Larry Fink, and Morgan Stanley CEO Ted Pick.
The Trump administration reportedly now looking at steps it could take to reduce the influence of proxy advisory firms like ISS and Glass Lewis and index fund managers, including Vanguard and BlackRock. The Wall Street Journal reporting that one option could be a broad ban on shareholder recommendations. Another could target recommendations on companies that have hired the proxy firms to do consulting work. That's a conflict that we've talked about on this broadcast that other CEOs have talked about as well. Additionally, the report says the Trump administration is looking at forcing index fund managers to vote on proposals in the way their clients vote. I think that's a little more problematic. My own opinion there. Proxy firms have faced heavy criticism from corporate leaders, including Elon Musk, who called them terrorists. Jamie Dimon has made some comments over the years just about the influence and some of the conflicts, one of them being this idea that, if you're playing on both sides. The idea, though, I don't know where you guys land on this. To me, the idea of either preventing them from making recommendations, I mean, there is a First Amendment. You should be able to do that. I have no problem with that. I think getting rid of some of the conflict part of this is important. But also the idea of taking away the vote from a BlackRock or a Vanguard or somebody else and just saying it's up to the individuals who are trading or own the shares.
Idea. So do I.
Yeah. So it's interesting that you say that. The default, what happens then, I think, could be wrong.
They just go with the company?
Most people, unfortunately, don't vote at all. And so what effectively you're doing by default is giving, you talk about who's got the power, you're giving more, this is a trade-off. Who do you want to have the power? Do you want the management to have the power, or do you want ostensibly Vanguard, and these other funds should be representing the interests of the shareholders. That is at least ostensibly what they should be doing, which is different to some degree than what the managers necessarily are doing. And it's not always aligned.
But I just don't like that. I don't like giving them my power.
Well, no. But just to be clear, Vanguard, BlackRock, all of these funds, if you want to vote yourself, you have every right to vote yourself. You can go on and vote now. Almost everybody's
most people don't.
Almost everybody's giving you the right to. It's not that they're taking your vote from you.
But most people
It's just that most people are not.
I just don't want them speaking on my behalf.
No, and it goes back.
Then that's it. If you're saying that you don't want anyone to speak on your behalf and you don't want to vote,
then
what you're saying is you want the management.
But I don't want them to. If I choose not to vote, that doesn't mean I'm giving you my vote.
Right. And the late great Charlie Munger even said, "Who made Larry Fink king?" And there was a time when at WEF or somewhere he said, we need to force behavior about, this happened to be about climate change and whatever you believe about climate change. Okay, but he was voting
I get it.
for activists that were forcing fossil fuel companies to do stuff based on Larry Fink's ideas and his own personal woke ideas about climate, which he's totally backed off of.
I'm hearing you. My question to you, though.
I think that was just egregious and ridiculous.
Okay. My question to you is a different one, though. If you're saying that you don't want to vote.
No, I'm not saying I don't want to vote. There are times when I do vote. By the way, I have money in all of these places, too. There are times when I do vote. But if I choose not to vote, it doesn't mean that I'm giving you my vote.
But I think then there's a question, which is I would think that you should be able to give the vote to the firm or not, and that should be an option.
But it shouldn't be an opt-out. It should be an opt-in if I choose to give you my vote, and I'm not opting in to do that. And the question is whether you think that to give that vote to anybody.
I appreciate that. The question is whether you think that most Americans whose 401k plan is effectively being managed by these funds, and the reason you're having a target-dated fund, for example,
which I would never invest in.
Okay, but there's a lot of people that have target-dated funds or have S&P funds in their 401k plans or other things that are being managed, and the reason you're using them is these are the firms that you're hiring to do this.
No, these are the firms my company are hiring, so these are my choices in my 401k.
Well, and that's the question, and the question is whether they give you, if you get the choice, you can use the choice, and if you don't use the choice, whether the firm should be able to have that choice.
But it should be an opt-in, not an opt-out.
Right, and if you decide, I like this company, I want to own it, I like what management's doing, I'm long their stock, what's the problem with defaulting to doing, to where the company has more influence than some outside proxy firm that might have all these ridiculous notions in their head?
I just think the conflict piece
I immediately think about CEO compensation.
Let's get rid of the conflict piece.
Okay.
Let's start with
are you talking about CEO compensation, that you don't want that rubber stamped? Or are the corporations always doing something bad, trying to put something over on shareholders?
But the question is, who is arguably going to have more of your interests? The management? This is the trade-off.
If they're aligned with the shares going up like you are, then they'll have it.
Well, hopefully, but the question is, who's looking out for you? Is it going to be the management, or would you like to have somebody else do that?
You put your money into that stock for a reason because you like the management, you like what they're doing.
Sure, but most of the people are not putting their money in each individual stock. So I just want to lay one issue out so everyone's on the same page. The reason why people don't vote, and the reason why this is an issue, is most people have money in their, an S&P 500 fund,
right.
And so there's 500 companies in that fund.
Okay.
Each of those companies has a proxy vote every year that could have a dozen or 20 different elections that have to be made. Most people do not have the ability, time, resources, energy, or effort to look through those votes.
Agreed.
And so then the question is, if you're saying that you just just blindly say whatever management says is great, go with God.
No.
That's one view.
But it's not whatever the proxy owners say.
Right. I would defer to them. I defer to them before your friends in the proxy. Or Larry.
I'm not talking about the proxy guys. I'm just saying that ostensibly what you're trying to do is the reason people hire people to manage their money, to do things for them, is because they are spending money and resources to try to look at each individual issue, arguably for you. Now, again, you take the conflict piece out.
Not index funds.
But the reason I invest in the S&P 500 is because I don't want to pay somebody a lot of money to manage that stuff.
And I certainly don't want.
Look, there may be times when I would agree with the proxy firms on some of these things. There would be times I would agree with management, but I would like, if I'm not.
But I'm not taking your vote away.
No, but I'm not blindly giving it to them either. if I opt into that, fine. But they should not. The default should not be that they get my vote if I don't take it.
And so how would you like that to work? Because what's going to happen under your scenario is people will have a 401k plan when they're first enrolled in the plan. 25 years ago, if you're starting somewhere, they're going to have a checkbox that's going to say, would you like me to do it or would you not like me to do it? Some people will just check it blindly. Some people won't check it blindly.
No, and that's the thing with opt-in. You're going to get a much smaller percentage of people who are doing that, and I think that's okay.
And you think that's okay?
Yeah, I do.
Because then, and even if they never vote again and never touch it.
But again, it's like, who do you put your blind trust in? Do you put your blind faith and trust in the head of the proxy firms or the head of the management?
Your default is, it seems to be that the corporation's trying to put something over on you and you need some.
But I
Can I ask you a question? If you had a contract, of any sort, I assume you would have a lawyer look at it for you. Maybe you wouldn't. But the reason you'd have the lawyer look at it for you is because ostensibly they work for you.
Right.
And ostensibly, they are trying to look out for your best interest because the people that you're buying the product from hopefully do. By the way, like I think when I buy a pair of sneakers, I hope that they have my interest at line.
That's how you see an
you
see an index fund manager in that light? I don't at all. Put the stocks in there.
It's what makes a market.
Put the stocks and make the fees low, and I'll take my chances. I'll handle it. Do not be voting your own ridiculous notions in with my stuff. You're not king. There was a no King's Day. Don't forget that.
And Joe marched.
Yeah, but you recognize who you're making the king then?
The CEO.
Bingo.
And the board.
Bingo.
I trust. That's why I'm buying their stock.
Okay.
Okay.
And you're not. But
okay,
you're not choosing to buy
I'm buying American business.
Cheese will be next.
Next on Squawk Pod, Lisa Su, CEO of chipmaker AMD, had a big message for Wall Street and consumers.
AI is for everyone. Like everyone should get a piece of AI.
The full conversation with Lisa Su is right after this break. Welcome back to Squawk Pod.
You're watching Squawk on CNBC. I'm Sorkin along with Joe Kernen and Becky. Quick on a Wednesday morning, hump day. The end of the shutdown could be close. The House expected to vote on the continuing resolution later today to reopen the government. You're looking at a beautiful live shot right now of the Capitol as the sun comes up. Let's hope it comes up and maybe a deal gets made against that backdrop.
It's almost like it comes up every day, no matter what. Thank God. Checking, the sun will come up.
Sun also rises.
And the sun will come up tomorrow.
Tomorrow.
The sun also
Bet
rises.
your bottom dollar.
We'll fight it.
Bet tomorrow. AMD hosting an analyst day yesterday. It's the first time in 3 years. The chipmaker says that revenue growth will expand 35% a year over the next 3 to 5 years, and the company's AI data center is expected to grow at 80% a year and potentially hit tens of billions of dollars in sales by 2027. Joining us right now is the AMD CEO, Lisa Su. A note on this, AMD's stock up phenomenally. You can see since she took over, 589%. Lisa, I think when you took over, this was a $2 billion market cap. I think today it's above $386 billion. Congratulations.
Thank you.
Who's counting?
Well, it's great to be here with you guys this morning. Thanks for having me.
It's great to see you, too. Last week, you had earnings that came out that beat all expectations, and yet the stock actually declined. I think people were waiting to see what you said at the Investor Day. They liked what they heard, especially when it came to the revenue, the annualized growth that you're expecting, 35%. I think most people were looking for closer to 30%. Predictions are hard, though, especially about the future. And I guess the big question is, what makes you so confident?
Well, first of all, it was a great day yesterday. It's always nice to sometimes take a step back from just, what's happening on a quarterly basis to really talk about long-term strategy. And it has been, as you said, it's been 3 years since we've hosted an analyst day. But what we thought is, there's been so much that's changed in the market just over the last, 12, 18, 24 months that we kind of needed to kind of just take a step back and talk about the company as a whole. And frankly, we're in just an amazing cycle for, technology and specifically around AI. So, back to, the major points, the market is accelerating at a pace that we just did not understand until over the last few years. I think we started a couple of years ago. We thought the AI accelerator TAM might be $300 billion, and that sounded like a really big number. And then each year we took it up. And now when we take a step back, we see this massive opportunity, really over $1 trillion, overall market as we get through 2030. And it's a place where everybody needs technology. Think about it as you can think about computing as equating to intelligence. And if you can get more intelligence, why wouldn't you want more computing? And that's kind of the market that we're in. And so, from that standpoint, we're really excited about what we have. It's a product portfolio, it's a set of partnerships, but it's also a vision for where computing is going in the future.
What makes you so sure of that demand? What do you see that makes you think not only that this demand is going to be big, but that it's real and that it's not going to disappear?
Well, Becky, we spend a lot of time in the ecosystem, and being in this industry for as long as I've been in this industry, over 30 years, I think you see a lot of cycles, and you see a lot of technologies take off. The key is what people are saying as they're actually utilizing the technology. So we work with all of the largest hyperscalers in the world, all of the largest enterprises, and if you looked at sort of the AI trajectory over the last couple of years, I think people started with tremendous excitement. ChatGPT came on board. Everyone was like, wow, this is pretty good. And then enterprises started using it. And frankly, the early enterprise usage was a little bit slow. I mean, people were kind of just trying to figure out what to do. But if I tell you what we've seen in the last 12 months, we've seen every one of our largest customers say, we can see the inflection point now, Lisa. Like, we can see demand is accelerating because people are now starting to get real productivity out of the AI use cases. And we have all of the largest hyperscalers in the world saying they're investing more in CapEx because they can see the return on the other side of it. So it is something that we always are looking for the signals in the market, but the signals in the market right now say that we're still at the very beginning of the technology, but you're starting to see significant productivity improvements.
Do you really think that they can see the returns on the other side? Or do you think there's a little bit of a big gamble going on, which is to say that there's a bunch of them will tell you quite openly, look, I'd much prefer to be ahead than behind, meaning ahead than behind. I'm worried that if I don't invest enough now, I won't have enough capacity later, but I can't necessarily fully math out how it's going to work out on the other end either.
I don't think it's a big gamble. I think it's the right gamble. And the way I would say it is we can also definitely see that more computing and more investments equate to a faster pace of innovation. I think that's definitely there. I think you can also see all of the pointers to more productivity and more capability. Now, exactly timing of ROI, right. If you're talking about is it 12 months or 24 months, I think that's where it becomes a little fuzzier. But I would say that, look, our largest customers are extremely disciplined companies, and they have the balance sheets to invest. And this idea.
I'll give you an example. The one that everybody talks about is OpenAI.
Yeah.
So OpenAI in 2028 is expecting to lose $74 billion. By the way, they have $13 billion in revenue right now. I believe that's the number. They believe that between 2028 and 2030, that they will all of a sudden become a profitable business. So they have to make a swing from a $74 billion loss. Something magical has to happen in the course of 24 months. So the question I would ask you, as somebody who, by the way, has to think of them to some degree as a customer / creditor of sorts, how you think about that math.
Yeah. So I would take a step back and say, when you look at the entirety of what the AI, sort of technology companies are, you have the largest hyperscalers, you have, I call it the AI native leaders like OpenAI, Anthropic, others, and what the underlying foundation is the same. They all need computing. Now, relative to your comment about OpenAI, I think OpenAI is a phenomenal company. I mean,
I do too. I use it every second. I love the business. I love what they're trying to do. I'm trying to understand the math.
Let's start with the vision, and then we'll come to the math. When you look at the math, the vision will say you need more computing. That today, computing is a limiting factor in how much people can adopt AI. And you can see that in a number of different places. And so, yes, you have to invest ahead of the curve so that you can get the entire user base on there. But if you just take a look at the growth in users, and not just at OpenAI, but across the entire AI ecosystem, we're seeing that growth. And we're seeing that growth because there is true productivity coming at the other end of it. And from that standpoint, I think we are all, like I said, we're disciplined business people, but we see an incredible opportunity in front of us. And absolutely, if one has the capability to address that with a fantastic balance sheet, you would absolutely do that.
Let's talk about your plans for AI data centers. You are scaling pretty rapidly. You see the growth there in terms of revenue being greater than 80% over the next several years, and potentially getting to have more than a 10% market share in that business over the next few years. To do that, you're going to have to go through NVIDIA, because by some estimates, they have more than 90% of the market share right now. What's your plan for doing that?
Well, I would say, once again, this is an amazing market with tremendous growth. And whenever you have a market that is, let's call it, early in the cycle and also on a steep growth curve, it really favors innovation and it favors partnership. From our standpoint, technology roadmap, we're super excited about the new products that we're bringing out. We have our MI350 series currently in production. We have a big step up with new rack scale architectures coming next year. What we also have is a really strong set of partnerships. OpenAI, we have partnerships with Oracle, Meta, all of the large hyperscalers. And the key in this type of market, Becky, is that everybody wants to have sort of multiple solutions, and frankly, there's no one solution that fits all. You can see with different workloads, you're going to want to have the best technology for each one, and we do believe we will have a significant piece of this market. I think between large hyperscalers, enterprises, as well as sovereign nation states that are out there building large data center installations. I think we are an excellent option, and we've talked about some of the key partnerships to do that.
Mind-boggling, what I've seen with AMD. And we spoke just briefly about Jerry, one of the co-founders, Jerry Sanders, who I knew for a while. He started this in 1969, I think. He was at Fairchild. Every employee got stock options when he started. And you told me I haven't kept up. He's still alive. Maybe he might be watching. He's 89 years old, I think. The reason I bring this up, Lisa, is I watched AMD challenge Intel for years and years, and I have to rethink everything because I thought of it as an also-ran back then, and it always seemed to be copying or cloning a lot of things that Intel did. The chart doesn't even work and this is only, what is that? That's only 10 years for Intel versus AMD. Something happened somewhere. Can you tell me where Intel missed something or AMD capitalized or capitalized? I mean, obviously, but was it, I don't know, did things change in the business? What caused Intel to lose its preeminence?
Well, first of all, Joe, as I said, we love Jerry. I hope Jerry's watching. He absolutely founded a fantastic company, and I'm honored to be a CEO. Look, I've been CEO for 11 years, a little bit over 11 years. And as I said, what you find in technology is when you're at inflection points in technology, you have to make the right strategic bets. You have to decide, hey, I know where it's going to go, and I'm going to invest in those places. And that's what we've done. I think we had a vision that high performance computing was going to be the most important thing, and that's what we were going to invest in. And with that, we systematically gained confidence. Becky, back to your earlier question, when I started, I think we had 1% of the CPU market, and today we're probably about 40%, and I think we have a path to be over 50% or number one in the market. And that came from just a true belief of where the technology is going and how do we partner with the largest companies out there.
I am not anybody to question your ability to do it, but it is really hard, I'm told, to come up with this rack scale infrastructure. And obviously you care about putting your customers first, you care about building trust with them, you're not going to do anything that would put that at risk. But even NVIDIA stumbled when they brought out the Blackwell chips, which is their third iteration of that architecture. So what are you doing? How How can you be so confident? So what are you doing to make sure that this pulls off without a hitch?
Well, Becky, I can say that our track record is we've built an execution machine, and we are very confident in our ability to bring out new products. One of the things that, when you look at the past 5 years, we've invested over $100 billion, both organically and inorganically in the company. So organically, really built up our engineering capability, hardware, software systems. Inorganically, we've done $60 billion of acquisitions with the idea of let's bring in the talent required to ensure that we can really pay off these big bets. The key in technology is you have to make the right decisions, and I think we've made many right decisions. We recently acquired a company called ZT Systems that specializes in data center rack scale solutions, and they have been absolutely key to our roadmap going forward, in addition to a number of other hardware and software acquisitions over the last few years.
Lisa, big question in the industry is how to think about the depreciating value of these chips. So you're talking about sort of this fascinating, fabulous new technology and changing, increasing and making that technology better every single year. As so many people are building these data centers, the fundamental question is how long do these chips actually work, or when I say work, are meaningful if you have to upgrade them, given how quickly things are moving, every call it 2 or 3 years or 4 years or whatnot, and what happens to them afterwards?
Yeah, absolutely. I think what we've actually seen is, I think this was something that people were wondering. Is it like the next chip is so much better that I have to rip out our current gear and put in new gear? What we're finding is that's just not the case. We're finding that as AI workloads expand, right? Think about it this way. You have the most advanced foundational models that need the latest and greatest and will take the newest chip as soon as it comes out. And then you have, a whole bunch of other AI companies that are out there that are just servicing, let's call it regular demand, medium-sized models, maybe even small models. Like large enterprises may do quite a bit of fine-tuning on their models, so they don't need the latest and greatest. What they want is something that is very reliable, very steady, has shown through the entire capability. And so they'll use, let's call it, the current technology. And what we're finding is there is a large set of use cases. Like we only always talk about the bleeding edge. And what I'd like people to think about is AI is for everyone. Like everyone should get a piece of AI. And that means in the cloud, that means you may use the current generation technology. And by the way, I'd love you to be using AI in your PCs, because I think that will also be one of the key things.
I totally get it. The big question is, are we building railroad tracks that are going to be here for a very long time? Or are you going to have to replace the tracks every 5 years, 10 years? I mean, look, this phone, which is the iPhone 17, I actually just found an old iPhone 2. You can't use the iPhone 2.
That's right.
You can't use really the iPhone 10. You probably, maybe the iPhone 12. So this is the fundamental question in terms of all of the money that's going into this space and how those chips, I agree with you, they'll get used in some way, somehow, but how, again, this goes to the sort of the math of all of this.
I think the math of people who are thinking, hey, is 4 years too long? I think are now beginning to see you can definitely use these assets, 5, 6 years, and some would say even beyond for, let's call it more of the workhorse applications. And that's what kind of makes the growth rates what it is, because for the absolute bleeding edge new technology, you're going to build big new data centers, and they're going to be different form factors, but the rest of the assets will continue to be used.
And you need a 5-year depreciation schedule in order for that to really pay off?
That's about.
Back to Andrew's earlier question, just going back to some of the deals that we've seen. From the outside, it looks like this crazy whirlwind where anybody and everybody in the industry, both when it comes to technology and energy, are meeting all the time. We just had Mike Wirth here talking about how he's talking to somebody, we don't know who, about building out an AI data center in Texas. Is it like that from the inside? Is it this crazy whirlwind of you got to meet with everybody all the time?
It is a whirlwind. I will say it is a whirlwind. And as we look across the ecosystem, I think one thing has changed. We've gone beyond, as a silicon company, we used to talk to our customers and our customers' customers. Like we would talk to the hyperscalers, we would talk to end users like the enterprises, the Mikes of the world. I think what's becoming clearer is now we need the entire value chain. That includes the people who are building the data centers, the people who are providing the power, and the people who are also providing the financing. Andrew, to your point about all of these things are important for us to put together. It is a broad ecosystem, and the way I think about it is that's actually the way it should be, because we need all of the pieces to accelerate for us to really put on all of this compute in the as fast as possible.
Are we, is the Trump administration using industrial policy in terms of Intel, in terms of the Biden administration, in terms of the CHIPS Act? Are those good things? Is there a way to do it that makes sense, or you just do what you're doing and?
Well, I think it's a fact of life that semiconductors are now essential to every country. They're essential to the United States. I think the Trump administration has actually been very, very helpful in terms of engaging industry. A bunch of my peers, myself, we spend a lot of time there just ensuring that there's a very clear understanding of how semiconductors, the U.S. wants to lead in semiconductors, and we absolutely want to be able to enable that. I think we lead today. We want to extend that. But it is a case where, yes, I think it's such a critical asset that it's a fact of life that we need to make sure that we're very, very much.
Do we want to design them, or do we want to make them?
We want to do both.
We absolutely. I mean, we lead in design. Even if it's cheaper somewhere else.
Yes. Yes, we lead in design today, but we must have manufacturing in the United States. And even if it's a little bit more expensive, that's totally fine. Because if you think about the value that we're adding to the economy, you absolutely want to have.
How about the CHIPS Act? Was that done? Is that the way to do it, or how was it administered? Say something bad. No.
Say something bad.
No, I'm kidding. I'm kidding. I'm kidding.
Well, what I will say is that it's really important for the U.S. to continue to serve the entire world. So I think we all believe in this notion of we want the world using U.S. semiconductors and U.S. technology, the U.S. AI stack, and so that's a key imperative.
So do you think it's a mistake then for this administration and the prior administration to try to put limits on chips that are being exported?
I don't think it's a mistake. I think export controls also make a lot of sense given national security. I think how you implement is, the devil is in the details, and that's where we want to be very involved in sort of the regulations and how they come out. But given how important semiconductors are, right, I think export controls are again a fact of life.
I just had a separate question, which I didn't get to earlier. Masa-san yesterday dumped his entire stake in NVIDIA, effectively $6 billion worth, $5.8 billion worth, to use that money to commit to OpenAI. And I'm so curious what your reaction to that is or was.
I don't know, Andrew, that I have a particular reaction to it. I mean, I have a lot of respect for Masa-san. I think he makes his decisions. I view this as the AI ecosystem is in a place where people are making bets and people are deciding what bets they want to make and whether, which part of the stack you want to make the bets. From our standpoint, we're certainly at the foundational silicon level, but we invest in a number of AI companies as well because we want access to that ecosystem.
But I just wonder whether he's saying to himself that the chip piece of this has run its course and that he thinks clearly the next stage of value is in a large language model like OpenAI. That seems, from the outside, that seems to be what he's saying without saying it aloud.
Well, I would say, being someone on the chip side, I think the chip trade, the chip industry is doing very, very well.
He got out in 2019, and that was a mistake for him
time to get out, right.
too. So we'll see.
We'll see.
Lisa, let me ask you about Intel and NVIDIA, because I know you don't like particularly being compared to either one of them, but now the two of them have a partnership themselves. And from a competitive standpoint, what does that mean to you? How do you change at all, if there's anything you would change in terms of how you face either one of those companies?
Well, I think, Becky, our industry is such that we compete and then we also partner. Like, we actually have a partnership with Intel as well on the x86 ecosystem. Our chips run interoperably with Intel chips. in some cases with NVIDIA chips. It's a complex ecosystem. My main goal is to ensure that we have the right partnerships. And partnership is actually very core to our principles. I'm a big believer in there's no one company that has all of the right solutions. You actually need to bring the best of the best together. So I like to say when we create partnerships, it's how do we do 1 + 1 is greater than 3. And we find we have lots of partnerships in the ecosystem to ensure that we operate well to really deliver everything that you need for the complexity of AI. Like AI is the most exciting, but it's also the most complex thing that we're bringing out there. And so you should expect that there are going to be partnerships with people who compete in some areas, but who also partner in other areas.
I think you have something in common with Condoleezza Rice. She started out wanting to be a concert pianist, and I think that was your first choice.
I wasn't good enough. She's a much better pianist than I am.
She said she wasn't good enough either, so Secretary of State was her second choice. I think we are lucky to have this be your second choice. We're lucky that you weren't better at it, Lisa.
I had one more just theoretical question. So I used to work, like I don't have enough to worry about, but I used to worry about Moore's Law and physical constraints and that the party's going to end. It almost became moot, didn't it? Because everything's sort of attached. Do we need Moore's Law to continue? Would it help if we could go on forever, and is it ending?
We all love Moore's Law. Moore's Law is, in its traditional sense, slowing down, but we've added many more laws on top of that. And the idea is when you have smart people and you focus them on a problem, they can do amazing things.
Getting around physics is hard, but they got around it in an elegant way.
Yes, you get to the next level of physics, right? That's what happens. You say, hey, I'm constrained. People used to say, like, there's no reason to keep investing in semiconductors. Semiconductors are going to be a mature industry. It's going to kind of just grow at a slow pace. And then what did you find? You found, AI came in, and all of a sudden, the foundation is semiconductors. Like everybody needs semiconductors. Right. And so the world does find a way when there is a need, whether it's computing or it's power or it's other things, engineers find a way to make sure they get through.
Malthus never made any, I don't think he ever won a bet, did he? I don't think he did. And when they tried to close the patent office in 1880 because nothing new was going to come around, I guess we've learned that wasn't a very good idea either. I can't believe it's going to continue without. So you can't really explain it, I guess, to me. Probably would take a while. How do you get around Moore's Law?
Well, I'll give you one quick idea, if it gives you any comfort. So
I might not understand it, but
we used to do everything in 2 dimensionals. And when we said, hey, we ran out of space, we decided we're going to put things on top of each other. And we call that chiplets. That's an example of one of the innovations where people were like, hey, that can't be done. Well, guess what? It can be done.
It's not an ice cream
snack. By the way, her decision to go with chiplets
chiplet?
is part of the reason that they took on Intel.
Oh,
that's right. Chiplets.
That's a chipwitch. Yeah.
People used to say, "Hey, you're gluing chips together," and it's like, no, we are showing you how you're supposed to build chips in the future, so that you can really get around some of these constraints. So there are lots of examples like this.
Lisa, I want to thank you very much for joining us today. Lisa Su of AMD, and we appreciate your time.
Thank you so much. It's great being here.
Thanks. It was a lot of fun.
Thank you. Please come back.
Next on Squawk Pod.
If you can have a pickleball league, you can have a snow league.
Olympic gold medalist snowboarder Shaun White, now an entrepreneur, bringing his sport to new audiences with the Snow League.
Traditionally, the competitions don't really provide any type of compensation. They don't even pay to the bottom. So we're really trying to elevate. We have the highest prize purse that's ever been in the sport.
You're listening to Squawk Pod from CNBC with Joe, Becky, and Andrew.
Stand by, Joe. His mic, cue.
The professional snowboarding and free skiing so-called Snow League has just secured more funding in its inaugural season. Joining us now is one of the Snow League's founders, 3-time U.S. Olympic gold medalist, Shaun White.
Thanks
great to
for
see
having
you.
me. Cheers.
We've been talking
Very
about
excited to have you here.
how someone becomes you, and you admitted it was you didn't think it through on the trampoline. You were doing things that normal people would say, no, I'm not going to do that, but you decided to go ahead and do it.
Even more surprising, my parents were like, yeah, that's okay.
How old were you? How old were you when you started on the trampoline?
Gosh, I was probably like 4 or 5.
4?
Yeah, jumping around. Then I got sponsored. First sponsor, I was 7 for snowboarding.
Before you realize you shouldn't be doing it. Before the fear takes over. I guess. Here's my thought on this. Sports, I mean, what can you say about sports in the world today? It's expanding everywhere. And I thought, you know what? If you can have a pickleball league, you can have a snow league.
Yeah. Hey.
I mean, I'm surprised it hasn't happened yet. We see it. How come it hasn't? Because every 4 years, we're riveted. Why don't we think that it would work in between Olympics?
No, it's incredible to see. I mean, look, at the Olympics, it's not just an athlete going. I mean, I was the athlete of the Winter Games, and there are others. You know, Chloe Kim. We have these amazingly talented athletes going in. After the Olympics, there's just nothing there for them. And you look at any traditional sport, there's tour. You know, football, baseball, soccer, UFC, F1. So it's a shame that we don't have that in the sport of free skiing and snowboarding. So I, felt it was my time and place to bring this about, and I'm so excited for it. And when you really look at the landscape, it's incredible, right? You have maybe 66 something million participants in golf. There's 130 something million participants in winter sport with a higher household income than golf. So you have this massive audience, and you want to reach them in between Olympic seasons. And so, the Snow League's founded, and really excited about it.
How much of it is about telling the story of the particular athletes? Because it's one, it's one thing. I find myself, like, I love just watching you or watching some of the, either Olympic stuff or X Games or people doing crazy things. But it's like if I flip onto it, I can stay there for a long time. But I haven't found myself saying, okay, next Sunday I need to go watch to see where they are in the season, right? And that, I assume, takes a different.
So we don't have a season, really.
Right, because that takes a different kind of dedication.
Where do you find
So how much of it is about just creating the season unto itself, and then how much is about creating a narrative around these different athletes so that I want to see every Sunday or whatever it is what's happening?
It's a great question, because for me, I get the question all the time. It's, where's the next Shaun White? Where's this next person in the sport? I'm like, they're there already. We're just not telling their story. So for me, it's all about elevating the athletes, bringing them to this new place, and really putting it on a pedestal, because it's been deemed action sports for the longest time, but it is sports. I mean, just because we're not kicking or throwing a ball, I mean, these athletes are risking so much to be out there, flying down the mountain. The half pipe's 22 feet tall, doing multiple flips. I mean, it's impressive to watch. So I think really pulling back the curtain and showing the lives of these athletes and the struggles it takes to get to this place. I mean, I was lucky that my story was really told, but now I have the chance to kind of bring these athletes up, tell their stories, and put them on that pedestal.
What's it take to get started? I know there was a funding round, $15 million.
Yeah, we just closed.
What would you need how much more do you need to get fully ready to go?
Yeah, it's a good question. I mean, we're thrilled to have just closed this second round, and we're moving. But look, we're supported by these massive sports backers, private equity, and
you have a relationship with NBC too.
NBC became our
Winter
broadcast
Olympics,
partner.
obviously. I don't know for how that was a great deal when we secured that for. But
being Steve Burke. Right?
Yeah, Steve Burke and Peacock.
Yeah, of course. It's been amazing. We have 359 Capital that came in, Wise Ventures, Bitcraft, Left Lane. These amazing people supporting us on this vision that I have. This goal, this league. So it's been incredible to have them, support us and really. After one event, we're heading into an Olympic year. It's just everything spinning and landing on winter sports. So it's just a perfect time to be launching this.
How much do you need to get in terms of sponsorship for the league versus sponsorship for the athletes themselves? And how does that divide even work?
Yeah, well, it kind of trickles down in a way. So traditionally, the competitions don't really provide any type of compensation. I mean, they don't even pay to the bottom. So we're really trying to elevate. We have the highest prize purse that's ever been in the sport. And what we're doing is an equal pay for men and women, things that weren't happening, in other competitions.
if you win a tournament, what do you get?
Yeah, right now it's $50,000 for the first place, spread out over the season, multiple events, and then we crown a winner at the end. But we're hoping to grow that dramatically as the season goes on. But most events, they don't even pay down to 10th place. They don't. If you show up at our event and compete, you will be getting the check for participation, and it's amazing.
I'm guessing that streaming is what makes this all possible. The idea that there are broadcasters, there are streamers who are desperate for content, and they're willing to pay for it.
Yeah.
What was the decision to go with NBC and with Peacock? How many bidders did you have? That's where the action is right now.
It is. I mean, look, I mentioned the Olympics coming our way. I'm a big fan of NBC. It was something where it just felt right, and they've been super supportive, and other leagues before us have joined NBC and had this amazing trajectory. The PLL, the Pickleball League, the Professional Lacrosse League. And so we're really just kind of like learning from these other leagues, kind of using F1 as our sort of North Star, this high-end sort of experience where normally you go to Aspen and you get the Swiss businessman that comes through. You get, the Kardashians, these people, they want that experience of Aspen. And snowboarding events for the longest time have had this kind of grungy culture wrapped around them, which is fine. It's kind of where we came from, this rebellious place. But we're really trying to elevate this now. We've kind of had this Paddock Club style 3-story glass structure at the bottom. We're serving hot sake and sushi and people, and you're watching this incredible event. And there's musical performances, all this stuff wrapped around it. But to touch on what you said, it's a mixture of things. We're bringing in some amazing sponsors. I mean, we have Tiffany's making our trophies. We have Marriott, these massive brands coming in to support. And then we're raising, obviously, on the side to make sure we can extend the events, because we want to get up to 10 to 15 events within the next 2 to 3 years.
Most of the athletes either, I assume, do they make money doing this? Does it cost them? I mean, a lot of golfers who are on the tour, it ultimately costs them to be on the tour.
Yeah.
It's really only the tippy top that are really making a nice living doing this.
Yeah, well, that's the thing. I felt so fortunate in my career. I'm like, how can we change this? How can we make it better? So you'll see some athletes have posted on social and things like that, how much it actually costs them to get to these events. And taking first or second place didn't even cover their travel to get down there. So we're really trying to elevate and really pay the athletes well. And through success with the league and more stops and the growth, I think we're really going to change the lives of the athletes, which is amazing. And make a synergy for the season, right? I was 16, I had this undefeated season, won every competition I entered, got to the end of the year, and they're like, the interview, I'll never forget, amazing accomplishment, Shaun, like no one's ever done that, but how's it feel to not be the world champion? I'm like, what? Exactly, like what did I not do to earn that title? So you really see a fragmented season. And again, like any traditional sport, we want just like a common place to show up, watch these athletes, and celebrate.
I feel like
it.
I just saw you skiing indoors. Is that true?
I was, yeah.
In Jersey, right?
In Jersey, all places.
Could you ever could you ever pull this off as an indoor situation?
We're
like
talking
in the middle of the
about
summer
it.
in Dubai or something?
We're talking about it. Look, it's a really, truly global series. So we're talking with New Zealand, South America and Chile, these places. And yeah, we would love to do something indoors. It's definitely going to be more challenging to build something like that, because you need the ceiling height, you need the weight, all of that.
Is there any facility in the world right now that can do that?
They're building a few right now that could probably handle it. So yeah, Stay tuned. But it's exciting.
There's more to talk about, but it gets complicated, Shaun, and that is how much this is worth, the offers that you get. You got a great offer, but the federation itself didn't like the offer or something. It was a $400 million media rights offer. I think you got to think it through exactly how to approach this in terms of ownership and everything else, right? And I don't know, I'll show you this as you're leaving, but we got to wrap right now, unfortunately. But it's a longer conversation because it's worth a lot. You don't want to sell too early. I think because these private equity guys would like to get in at a low price.
Yeah, obviously. It's exciting times, though. Yeah, it's exciting times.
Good. All right, Shaun, thanks.
Thank you. Thanks for having me.
We appreciate it.
And that is Squawk Pod for today, this Wednesday. Thank you for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Get the best of our TV show right into your ears when you follow Squawk Pod wherever you get your podcasts. Have a great Wednesday. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.